And hopefully we now have a projection of sound. Very nice. All right, so we not only have sound now, but we have audio and visual. Perfect. All right. I love doing these pre-tests and getting everything ready and then teeing it up and then having the recordings. All right. All right. Everything's okay, right? All right. Excellent. All right. Well, I see a lot of familiar names in here. And Ron W. says, let there be sound. All right. Very nice. You can hear it's a miracle. Rick W., thank you very much. All right, sound is back. All right, basically what I was going over is on Tuesday, we went over some of my favorite indicators besides person's pivot and my PPS buy and sell signals, bullish bearish indicators. We also look at health and breadth studies. We went over the advanced decline comparative ratio lines on the breakdown of the different stock indices that we use, as well as a volume indicator created by Joe Granville on balance volume. It helps us to maybe be a little bit better understanding of the health and the breadth of a market move. And I know that a lot of people looking at a daily chart are very concerned, or at least we're thinking that we're going to come back and fill this little gap. And while we will fill that gap, will we fill it from higher levels? And so I think the other day, this little bear trap in here, people thought that the market was going to go down. But one of the things about the person's pivot indicator, there was no momentum sell signal involved yet. However, make no mistake, my indication was I think that we will see the January effect sell-off, but from higher levels. I know I've stated that many times. I'm still in that opinion. I'm still in that camp. And one of the reasons that I have been saying that is because the fact that we have a strong advanced decline or market internals. The market internals are just a little too strong right now. In fact, that's what we went over on Tuesday, how to quantify this market move. We saw the breakout, and these are the exact same lines that we used in Tuesday's presentation. The advanced decline on the NYSE has broken out sharply. The only thing that it is a little bit nervy is the fact that it's not associated itself with an increase in volume. So that tells me that we will see a little bit, we should see more participation to the upside, and lo and behold, I would be looking for a relative performance change-up in the marketplace, and I'll be examining at higher levels for specific sell signals. So the first area so let's ask ourselves what higher level. The first number that we have to work with is, of course, 1481, which is the monthly pivot point. So if the first test of this resistance should offer, if we're looking at a daily chart, then I would be looking at breaking down the time zone. So instead of looking at an end of day, I'd be looking at an intraday, like a 15 or an hourly chart, to see if we start to get some sell signals up there, some bearish formations, and see if we get a rollover in the marketplace for that traditional seasonal January sell-off in the marketplace. And so right now, the fact that the market rallied, we see a little bit of improvement in the AD lines. We see a little bit of upswing in volume, but not enough to say it's time to get long this market by any stretch of the imagination. I think that there's a little bit more room left in the marketplace, but when the market rallies, and that's what we're using these technical tools, and that's what a part of Tuesday was, to say, listen, first off, on Tuesday, we came in, we said, here are some of my favorite technical tools, and here's how we apply them. We invited first-time users to come in and see how we utilize our indicators, to see how we apply this on an intraday basis, day in and day out. Next, we're conducting today's presentation on what sectors we want to kind of focus in on. If we're starting to say that the overall market's rallying, I've got some really exciting news to share with you about some sector analysis and seasonal analysis and how we put everything together in a complete package and start to develop some kind of a trading strategy or a trading opportunity that's out there. On Monday, we are going to conduct planning and scanning. It's a weekly thing we do for our clients and friends and our community. So for first-time visitors, you're more than welcome to come back tomorrow, Friday, and spend the day with us. But certainly Monday morning, come on back for planning and scanning, because we're going to review how did the market end for the week. Again, it's not how the market opens, it's generally how the market closes. And it's not just on a daily basis, but it's also on a weekly basis. So if we see the Friday, if we see a little bit more upside in the market tomorrow, and we don't see a pure breakout on accelerated volume, and we don't see an improvement on the AD lines, then I would say next week, look for a turn in the market. So what sectors would really or could be susceptible? And that's what today's session is about. What are the strong sectors? What are the weak sectors? And using the technical tools in conjunction with this information may help you develop your own trading plan and be a little bit better educated. But first off, I wanted to go through, and that's what I have in store for you. So if that's what you're here for, hopefully we put together what we promised, and I just wanted to do a quick summary and review of what we've gone over and what to expect for this open house session that we've put together for 2013, the first full trading week in 2013. So this is what we have intended. By law, the government and the regulators, they like to let me know that trading is risky, and so also stop loss limit orders don't necessarily limit loss amounts. That's very important, because if you put a stop at the market and it gaps below your stop, it's not going to limit your losses. People probably, for the most part, know that. And of course, this presentation is educational in information. We're not giving out any buy or sell recommendations. All right. I'm glad we got through that. My trading priorities have always been, I look for directional ideas. Some of you know, I don't know if we've got a lot of newcomers here that have never heard of me before. I've been around for well over 30 years in the markets. I started in 1977 as a runner at the Chicago Mercantile Exchange. I started to work for George Lane, who created an indicator called stochastics. I saw George trade. I've been an independent trader. I've owned a brokerage firm. I've been a managing director, branch manager of brokerage firms, and I've pretty much done everything in and out of the business that there possibly is. Created trading systems, model portfolio systems. Our indicators are available on a variety of different platforms, not exclusive and solely limited to Thinkorswim. As many people here know that we have our indicators on the TOS platform, but we also have our indicators on Bloomberg Terminal. We have relationship with TradeStation. So we've done a lot of different work, and the software and the analysis platform that I'm using today is on Trade Navigator. The reason we have Trade Navigator, we've used it for probably close to a decade, and one of the things that Trade Navigator allows us to do is many different features, and it had our indicators up there as well as scanning. So in addition to that, they've also been probably the leader in seasonal studies for software. They're probably one of the first, and you know what, many people don't know this, but Larry Williams and Jake Bernstein, two individuals that I know personally. Jake is certainly someone that I would call a personal friend, and I think he would call me a friend as well. And Larry Williams himself, we are very good acquaintances. You know, they were the pioneers in the seasonal studies. And so Larry and both Jake worked with Trade Navigator back in the day when I worked with George Lane in the early 80s. I mean, when you started in commodities, let me tell you something. If you didn't understand seasonal analysis, you were fighting the wrong side of the market, because typically speaking, at the beginning of the year, which is incidentally right now, we would come into a strong time period, you'd want to buy breaks in the grains. Now, back, if you think about this, in the early 80s, we didn't have the wealth of trading and market opportunities that you have today in diversified products. We had grains, we had meats, we had the metals, we had the financials, you had stocks, right? And now you have pretty much everything. Stocks were not as volatile as they are right now. There wasn't that volatility factor. Now we trade opportunities on the volatility through the VIX. So there's all types of different ways to trade the market now as market products have evolved, as trading opportunities have expanded around the globe. And I think one of the things that still holds true to this day is that human nature, there still exists this supply and demand function in the marketplace. And so it's when we use seasonal analysis, remember, not all years are created equally. Different things happen, but there are time periods where there are shortages of supplies of products and an increase in demand of products. In the business cycle, when you're in a recession, demand is more muted. So when you're in a seasonally strong period of time, remember, you're going to see perhaps muted moves to the upside based on that low demand environment. In economically strong periods of time, when there's a shortage of supply and an increase in demand, you're going to see a more bullish or more magnified price move. So that's why not all years are created equal. When we conducted the session on Tuesday, we wanted to teach or share with you some of the technical tools that help us as technicians uncover opportunities, at least to develop maybe a better strategy, to understand if there's any ammunition in the market. Remember, we went through the commitment of traders report data to see what the percent of open interest really was all about. Remember, we said look at the market or the net positions now as compared to where they were several months ago. And obviously there was a very light position on all parties. I said that this particular scenario will either, we could see money start to pour in the market, which we could see exaggerated price moves. And one of the examples we talked about was in the euro currency, and probably you've now noticed the euro currency had a tremendous move. I would bet because we saw money flow into the euro currency. So why tomorrow is important? Because tomorrow is Friday. We're going to get a commitment of traders report. We're also going to get probably a health reading of the market to see who's actually in the market still and who's not. More importantly, we're going to get a reading on the close of the business. So these are the tools that give me a better directional idea. And with a directional idea, then I could put together a trading strategy, one that I can take a look at what my overall position is, how much left or excess capital I have. Maybe I want to go with a higher risk, higher capital intensive strategy like just an outright futures, or perhaps I want to go with a more defined risk and defined profit objective type strategy that's less capital intensive and go with maybe a credit call or a debit put spread if I'm bearish in the market. Execution is very important. Execution, sometimes we put orders in and we don't get filled. In fact, this week we talked about a low close doji in feeder cattle that we sent an email alert out. And the area that we wanted to get short happened to be the exact high tick. So execution is very important. Trade management, how do you place your stops, your risk-reward objectives, and last but not least, position sizing. So these are the trading priorities that we like and need as traders, at least in my experience, when you're position trading and swing trading to maintain. As well, day traders need to adhere to some of these top priorities. So the indicators and studies I use is seasonal analysis, person's pivots on multiple time frame, health and breadth studies, momentum. I like to look at closing prices compared to past price action on the candle charts, and we've taken a look at consensus commitment of data's report. All right, so let's get into the meat and potatoes of today's trade or segment. First off, I wanted to take a look at the market segments so that you saw in black and white, red and green, from top to bottom, what the best percentage gainer for 2000 for at least the last year. And this is a one-year performance all the way through yesterday's close. All right? So if you take a look at this, the worst sector, it's actually negative in the year, was semiconductors and semiconductor equipment. As we go through the list, diversified financials might be a surprise to everyone. In the last year, that was the best performing segment along with media and then retailing. Software services, pharmaceutical, biotech, all this whole sector as a group, almost every sector. And if you take a look at these names, I mean, let's go walk through some of these together, because if we're still in doubt that the economy is growing, then obviously we saw a pretty decent turn of events in household, automobiles and components, food and beverage. Of course, you know what? In good times, bad times, people drink and smoke. That's what I was always taught when I got into business. But technology, materials, commercial, professional services, capital goods. Looking at capital goods could be electrical contracting, equipment, heavy machinery. That's capital goods. So you take a look at like a John Deere, you take a look at a Caterpillar, a Kabuto, machinery, if I pronounce that correctly, banks, healthcare and equipment services. Even real estate did recover last year. Software, insurance recovered even after Hurricane Sandy. Retailing. So to me, I look at this and I go, wow, that's a pretty impressive list of performance. Will this continue? And partly it's interesting to note that we want to take a breakdown. One of the areas that attracted me, or at least that I wanted to discuss today, was what sectors are coming into and I don't know, let me ask you. I would, for the next few weeks and the next short term, look for some short-term opportunity. We're looking for a rollover for the January traditional decline or sell-off in the market. We know there's a gap below the market. But if you saw a segment that was maybe really overstretched in valuation, most likely you are not going to see people chase an overbought market. If you get a broad-based sell-off, you might get the market segments that are significantly overbought. Those are the areas that I would look for a selling opportunity. Does that make sense? So for me, I'm interested in finding out, all right, if we are going to see the market roll or turn over a bit, because no market goes straight up, right? If the market does turn, are these that I've just highlighted in red, are these segments or these sectors of the marketplace, they've seen tremendous gains for the year. My next question is, are they entering or exiting a seasonal strong or weak period of time? And that's one of the things that I think is very important to ask yourself, because if we see a market correction and we see the sector that has had a tremendous gain, and if we're going to maybe look for opportunity, I mean, everyone's heard of the term sector rotation, right? You've heard that term. Money comes out of one sector and goes into another. I mean, just on a grand scheme of things, if I was making a boatload of money in the media and diversified financials, I'd probably take some of the money off the table there and put it to some of the weaker or less pronounced movers. One might be semiconductors. Perhaps if it's time for businesses to expand, perhaps they're going to expand in the semi space and look for maybe some more investment in technology. I mean, that could be, after all, I think a semiconductor chip goes in almost everything, from a phone to a refrigerator to a microwave, your cars. I mean, appliances, now everything's electronic and uses computer chips. So with that said, there is an eye-opening analysis. And one of the things that I want to look at is in the consumer and say, okay, how is the consumer doing? And when I break down that sector, I want to take a look at consumer durables and apparel first off. When I take a look at that, I say, how is the consumer sector been? Well, home building was if we take a look at a subsector analysis, whole building was just off the charts this year. And that's okay, because if you go back and look at the last 2 years, that sector got beat up. But household appliances, consumers have been buying. If you take a look at a stock called Whirlpool, for example, consumers have been buying appliances. That does not specifically, it just says that while they might not be buying flat screen TVs at Best Buy, they are buying something. So consumers are not down and out. Leisure products are still making money. Home furnishing, people are buying furniture, housewares. About the only thing they didn't buy was shoes in footwear. So with that said, let's take a look at, most of you are familiar with this thing called the XLY, Consumer Discretionary Select ETF. And I wanted to point this out to you because the reason the arrow is here is this is where the sector started in 2012, which is roughly around 39, and we're trading roughly around 49. So the sector itself, would you agree, has had a significant move in 2012, right? Yeah, several moves, but overall, from point A to point B, it's moved up significantly for the year. But here's the funny thing. The top 10 holdings in XLY, Comcast, Home Depot, Amazon, McDonald's, Disney, News Corp, Ford, Time Warner, Lowe's, Starbucks. This whole sector tends to peak out towards the middle of January. Now, if I'm looking at an overall market that might go down, like say the S&Ps, I'm looking for overhead resistance, I'm looking for a potential, I know I've got a gap below the market, but anyone that could look at a chart can see there's a gap below the market. I want to look to see, and people could say, well, gee, you know, the market's not going to turn until we hit resistance or until there's signs of a market weakening, and I appreciate that. With the tools that I'm using and looking at, are more stocks going up in conjunction with this move, and is this move associated on an increase in volume? And those two observations may help us to get a more quantitative assessment of how much sustainability the current rally has to it. And that's why we're going to go over this on Monday's planning and scanning, because we are coming close to potentially the end of this move. The key is, whether it goes to 81 or 96 or wherever it goes, you know, will you be able to sell the high tick? And there isn't any of the best traders that I've ever met has ever sell the high tick. It very seldom happens. In fact, when you sell the high tick, you get nervous because it's generally not the high of the move. What you want to do is wait for the market to give clues that it's starting to, the trend is starting to reverse, and then go with that downside. But what I want to do, and this is one of the things that I want to share with you, is I want to take advantage of the market when it gets ready to roll. I don't want to sell sectors that people might put money into. I want to sell sectors that people want to take money out of. So what I want to do is look for sectors that are a little overbought, that have had tremendous moves to the upside for the last year or the quarter, and look for these sectors, start picking out these sectors that enter a seasonally weak period of time. And actually, the XLY begins, as you can see, this is not a one-day chart. I've actually included, for the next 60 days, the trend going into the end of February, the trend in the XLY, that trend tends to move lower. So for me, any further upside gains, I might be able to look at perhaps some type of a bearish, if you're an options strategist. What's neat about this is, A, I might be able to now define the time horizon of where my expiration play might be. So the expiration play might be, as you can see, market moves lower going into at least the last week of February. So February expirations, the third week of the month, might be a nice play on any further strength in this sector or maybe these stocks to look at some perhaps credit call strategies where it's less capital intensive, or I might be able to look at some type of a directional play in this space. Now, this is an interesting concept as well, because in the internet sector, the IIX, it had a tremendous move to the upside this year as well. I mean, yes, granted, it had some ups, it had some downs, it had some ups and downs, but from one year to the next, from the opening bell of 2012 to the closing bell of 2012, the IIX saw a significant move to the upside. Here's some of the top names: Akamai, Amazon, Baidu, Broadcom, Cisco, eBay, Expedia, Google, Netflix, and Yahoo. And almost every single one of these names have enjoyed substantial gains over the last few weeks and months. So here's an interesting concept. As we notice here, at least in the IIX, which is an index that's been around an awful long time, one of the things that we notice is that it has a tendency to also peak out, a significant peak lasting into early March. So I would say I would start picking out some of these names and look for a turn in the market. So now I'm looking for individual names that are attached to that sector that tend to see, that have had big moves that tend to reverse. I mean, it's not a picture-perfect world. Some years are going to be better than others. We might be looking at a credit call spread in some of these names if they've had tremendous moves, and the better play might be just to buy deep out of the money puts. You know, so it all depends on our outlook and what the relationship or the beta or correlation is of the underlying name or stock to that sector. But this particular sector, as well as the consumer discretionary sector, has a tendency to peak out in early January. So now the question begs, what sector didn't really move? And we come across this little area called energy. And it's funny, I've got this long black line pointing to the beginning of the year, and as you can see, we didn't really see a major appreciation in the energy space in 2012. If you were invested in especially the OIH or oil service sector, I mean, you probably were sucking egg with Schlumberger and Halliburton, et cetera, et cetera. And we all know that the God forbid if you were in any of the coal stocks, that was kind of painful. Natural gas has been painful. And so if the economy, and I'm going to revert back to this chart over here. If the economy is improving, and if we, as it's and pretty much, folks, stocks are a reflection of either investment demand, and since we know that a lot of people aren't really invested in the stock market because they've pulled their money out, right? So companies' performance, at least in the last year and a half, has been on earnings, and we know that earnings have been just, you know, companies have been beating, whether they've been lowered or not, their expectations. They've been beating and they've been earning. Companies have been making, and there are a lot of companies that are cash rich. I'm not making these numbers up. These are facts. So with that said, that means they must be producing. There is demand. There's commerce. That means there is business going on. And if there's business going on, and as confidence improves, now that we've got the elections out of the way, now that we got the fiscal cliff out of the way, believe me, the media does nothing but put out bad news. Bad news all the time. That's how they sell. We have to look, as investors and traders, we have to look beyond the bad news and say what's out there. And I think with that mindset, there are some of these technical analysis tools that we use and teach to our students really help see through the BS and gets, you know, kind of like clear. You know, it's the old saying, don't trade what you believe, trade what you see. And I'm looking at some green chart here that says, man, if this does not show a recession type of segment of the market, this shows more of an expanding economy. Banks, capital goods, real estate, telecommunication, insurance, these are not sectors that are showing a bearish economy. And so if the economy is going to improve, then people are going to consume fuel, we're going to consume transportation fuel, which is diesel, jet fuel. So there's different areas, and since we've not built any new refineries in this country in a long time, then we're going to probably see an expansion or need for the service sector of refineries. So I'm fairly bullish in that segment of the marketplace right now. So I'm looking at what sectors are strong, and now I'm looking at what sector didn't move, and you see that energy really didn't move from a performance standpoint. It really hasn't. I mean, it spent most of the year at unchanged or negative on the year than it did positive. So it really didn't see any appreciable move to the upside. And the funny thing is, in the next week or so, if we see a pullback, it's actually the best time to start looking to get long that segment. This energy seasonal chart is actually kind of like the opposite of what we just saw with consumer discretionary as well as internet space. So for me, if there is a setback in the marketplace, I'm thinking that what might be some, with the right analysis and the right tools to help me make educated trading decisions, what I'm saying is that we might have some great opportunity for some reversals in certain segments of the market, and then while everyone's talking about, because this will all happen, perhaps Google and perhaps eBay, which quite frankly, eBay isn't quite participating in this market. It had a couple nice little short jabs to the downside. I'll show you what I'm referring to. Just bear with us. So, if I was looking at the market and saying, why are we not participating in this rally? First off, eBay's near resistance. Second off, eBay had a tremendous run this year. So if there's any stock susceptible for a profit taking, if it didn't have a profit, there's nothing to take. So I look at a monthly chart and I say, gee, did it have a profit? It certainly had a nice acceleration to the upside. And now I have to say, we enter in a seasonal weak period of time. And so I have to ask myself, is the market demonstrating strength or weakness right now in relationship to the overall market? The fact is it makes a new high and it fails. It doesn't really move up in association with the marketplace. I'm going to be looking for this market to roll over. If we see continuation of the market move and it doesn't move in association with an increase in volume, then I'm going to say that perhaps eBay, which enters in a seasonally weak period of time, I think might give us a shorting opportunity, or at least when we get a signal up in here. Because as you notice in our weekly chart, and I'll just bring this up to speed with you. All right. So this is a weekly chart, and it's saying that all these green arrows say that it's in a bullish bias. So if the market is so bullish, and we are making higher highs, the problem is that it's not on any sustainable volume. So if we get in the shorter term, which is the daily chart, and the fact that we're actually near resistance up in here, so any further upside, I'd be looking for the market to roll over. Now, what kind of downside could I anticipate? Well, if it gets up near this 54, 55 handle, I'd say easily we could come back in time to test the 50, the 49, perhaps come back into this area consolidation. So now using seasonal analysis and technical analysis, I'm able to derive A, and pick a segment and a stock that might be susceptible to some profit taking, and B, maybe put in within the realm of reality what the price level of the market might get to. So now I might be able to do two things as an option trader: pick out the right strategy or a decent strategy and the right strike prices. So that's where we take a look at the markets as they relate to seasonal analysis combined with technical analysis. So when we look at being an analyst, we got to say, okay, how are we going to trade it? I mean, technical studies are just part of the of helping make a trading decision. And of course, success doesn't come from picking up a book. I saw someone comment, and I think it was who commented on that? Sonia, of course. Sonia commented, "I'm glad you got that book." You know, shameless plug is we came out with the new book, The Master Stock Trader, and you know, really is a book that talks about the seasonals and the sectors and some of the indicators that we're addressing in today's presentation. But for the most part, anyone could pick up a book, and most people look at, you know, the same old indicators over and over again. The 200-day moving average. They look at, after the fact the market moves. I'm sure people will be talking about Google, or have been in the last few days or week. You know, now that Google's had this huge, tremendous move, Yahoo and the whole segment. You know, they seem to always talk about a market after it's moved. They don't talk about something before it takes off. And to make money in the market, you know, you got to be properly positioned in the market before it moves. It's tough to make money in a market while it's moving, because to chase a market, I always found, to always put you at a higher risk in the marketplace. It's not impossible to make money. I said the best way to make money is to be positioned in the market before it takes off, up or down. So with that said, I think one of the things that we try to do around here, we've been doing for years, is to help traders become better analysts themselves, apply different trading tools that aren't, really in the mainstream of education models. So when you trade by rules, you get that confidence. Trading by rules, you need discipline. You've got to be disciplined in following the rules. If you don't know what the rules are and you're just trading blindly because I think it's going to go up, or I heard it's going to go up, or gee, I better get involved in this. I mean, now that Facebook is at 32, no one liked it. Last year we were telling clients to buy some at 32, some at 30, some at 28, and then just wait. And then, you know what? If you pick some up at 22, 24, that's great. As a long-term investor, right? A long-term investor. 6 months later, here's Facebook trading over 31 again. If you have a longer-term outlook, that's a little bit different. But at least you're trading by the rules. I'm going to trade based and put some capital to work in this space. If you have confidence, and again, it's, you're not going to make money in the market unless you're in the market, right? And all of a sudden one day you wake up and say, yes, I had money committed to this area and this area and this space, and boy, it started to move. And, that's the thing about the markets. Sometimes I think the market's going to move tomorrow, and it's actually Tuesday, so I'm a day early. But if I use my analysis and my tools, and I'm disciplined in my approach, I know what I'm going to risk on the trade, I know what kind of capital I'm putting into the trade, if the trade is worthwhile, if the analysis and the indicators that I'm using are correct, guess what? I'm going to profit from that decision. And if I don't, I typically know what my risk is. So by doing that day in, day out, week in, week out, at least you get that confidence, you get that consistency, and that's where trading by the rules happens. Success, like I said, does not come from education, but the right education and applying what you learned. Those are four big words, applying what you learned. Because you can learn things, but not apply it. And I know there's a lot of people that will post statements in today's session that, not everyone has different experience, and everyone has different educational background in trading. For the most part, whether you're an option trader, a futures trader, whatever kind of trader you are, I think the bottom line is, unless you put your toe in the water and you see consistency, I mean, it's just not going to work for you. And I think as looking for opportunities coming up, we always are influenced with today's environment of news. We have so many ways of being influenced by news. In the old days, we had the news flashes on our computer screens when in the brokerage days, And now I can get it on my iPhone. I can get it via my wife. I can get it on TV. I can get it on the internet. I mean, bad news travels so much more quickly nowadays. And that news can influence your trading. If you set up a plan and you set up at least knowing, okay, wait a minute, if I'm going to get short Google or if I'm going to sell the internet space, why would I do that? Well, because the internet space, through its lifetime history, typically on average, this is what the seasonal aspect of the market does, it typically goes down. One of the observations that I like to share with everyone, and this is extremely important, I find that if a market has been in recent history in sync with its seasonal tendency, then I give more credibility that it will continue to follow in sync with its seasonal tendency. So if a market is supposed to go up from October through the first week of January, and it does, then if it's supposed to go down in the middle of January into March, I suspect it just might. If the market had an accelerated move to the upside and it's in overbought territory or it's showing signs that it's overvalued, then I have at least a better understanding and a higher probability that if it does adhere to its seasonality, we will see that correction. Now remember this, corrections come in two forms, sideways or down if you're bearish. If the market's gone up and you're looking for a correction, they can go sideways or down. So what's the right strategy? If it's sideways and you just see the market grind, it doesn't go and advance any higher, then obviously if you're looking for a move then to move lower, and it doesn't have a magnified price move to the downside, a credit call spread would be the right application. What's the time horizon? If you see that the seasonal tendency for that space or that sector or that stock is to last into March, then obviously you don't have to go all the way to a March expiration. You can simply use the February expiration. So I guess I am cherry picking 2 or 3 sectors, consumer discretionary, the IIX, and of course energy, because I think in the next 30 days out, we have some opportunities, or 45 days out here going into the February expiration, we have some opportunities here that we could take advantage of in those spaces. So one of the things that many of you are all familiar with, I would imagine, is my work with my proprietary pattern setups with the high close doji. It's a very high probability pattern. It's frequent in nature. When it shows up, there are specific rules on how to get in it, where your stop placements are established. There's specific criteria that be met for a good setup. And of course, the close, as it relates to past price action, helps to trigger the entry. What I mean by that last bullet point, if the close is significantly well off or it was a long range candle, then I'd look for a small little pullback to get in. But the high close doji and its opposite, the low close doji, are 2 fabulous patterns that we look for in making trade decisions and entries as well. So sometimes if the market gives you a low close doji, you'd look for a market retracement to the upside and sell that rally. That was something that we did or suggested in a trade in the commodity markets this week, which was in feeder cattle. So, you know, it's not just a pattern for day trading. It works in all spectrum of markets and different time frames. Okay? So imagine this. This is a scanning, and actually this is a screenshot of our long stocks we'd like to take a look at running scans. Why would I do this? Well, if, for example, we're in a seasonal strong period of time, and if I could pick up scans for not just buy signals, but remember I just talked about the high close doji, right? So if I'm looking in a seasonally strong period of time, and lo and behold, I get a high close doji pattern in a seasonally strong period of time for a marketplace, I can make and assess, gee, what's the duration of that trend? and then I can make a determination of whether I want to actually take that trade or not, right? So we don't know whether this is going to be the biggest trade since sliced bread or the best trade since sliced bread, or if it's going to just, be a trade. But I can tell you this, the reason I bring this up is because combined with the tools that we talked about on Tuesday, looking at the opportunities that are present in the marketplace right now, I will be looking for scans in those sectors, those stocks in those sectors. And that's one of the things that I think is very important. What's what we do at Trading Triggers University with our students. We do that on Mondays on planning and scanning. We look for opportunities here. So again, for those, just as a reminder, for those who are attending today's session, and yes, this is being recorded, for those that are attending today's session, first time, if you've never joined our trading room, come join our trading room tomorrow, Friday, as well as Monday, and we'll be doing a weekend review, which is on Monday mornings, and we conduct that at typically at 9 a.m. Eastern, a half hour before the market opens. We'll talk about what did the sectors look like, what's popped up on our radar screen, what's popped up on our scanning, and so that it is. For those who are interested, what I'm suggesting is that if we are approaching a lot of these stocks, so by the way, if you take a look at Seagate while I have it up here, I mean, we even generated daily high close doji while the weekly was in buy mode. So, these buy signals, if you're a thinkorswim client, then these are the PPS buy signals, by the way. The only thing is that with thinkorswim, which is really exciting, is that you can run scans on PPS on daily basis. But what we've done is we've created, if the doji, the high close doji and the low close doji is a very high probable, very strong high probability type of indicator, then if I'm looking for buy signals in a segment that's entering a seasonally strong period of time, I want to run scans on the end of day to find out what stocks generated a daily or what stocks generated a weekly potential high close doji buy signal. More importantly, if I'm entering a sector of the market, and if you look at the IIX, gosh, I only put a few stocks. The IIX has a tremendous listing of stocks comprised. So if I want to just specifically target a segment in the IIX that forms low close dojis, then that will trigger, and that is the setup and the trigger for a bearish position. How do I want to take that bearish position? If the stock itself is correlated to that segment, and if it has a strong correlation, we know that that sector generally pulls back going into early March. So I'll be looking for, what's a pullback? Is it 2%, 5%, 10%? Is it just sideways? It just money doesn't go back into that segment until the spring? Those are those questions would be answered by examining the daily chart patterns and as well by examining the volume levels, right? So, I mean, obviously, if we start to see, as we approach person's monthly pivot in a segment like Seagate, for example, or Google, if we start to run scans for not high close doji, but low close dojis in stocks that are in sectors that are entering weak period of time, I think then we can come up with at least a better way of trading. More importantly, a lot of times when you look at these, like for example today, we get these alert pop-ups. So for day traders, whether you're using, and again, if you have TOS or TradeStation, whatever platform you have my indicators with, they're fabulous indicators to help us develop from a trade ideas from longer term perspective into shorter term. So if we see that right now we suspect that there's a little bit more potentially, as we were talking earlier this week, that the AD lines were a little strong, that it didn't look like it was ready. We're looking for correction, but from higher levels. That doesn't mean that day traders can't take advantage of maybe alerts from high close dojis that you get while the longer terms in a buy mode. So in essence, I think Tuesday's webinar was designed to say, hey, what tools are out there that you can use? You know, will stochastics work? Will MACD work? Will moving average crossovers work? If you're using a 10-day, 20, 50, 200-day moving average, by the time the market reverses, it might be, you know, it's generally a little bit later. I think that in the coming few weeks, there's specific sectors, as I've just outlined with you, and these are just two that I'm looking for corrections in. And, of course, the one bullish sector in the energy as we enter in that seasonally strong period of time. I'll be looking and scanning for buying opportunities in the energy sector, in the energy space. Specifically, you know, maybe it's to break it down with the OIH. Maybe it's to look at equipment providers as well. So there's all kinds of segments that we could look at. But for those who had taken advantage before, we have built certain scanners, and I wanted to invite you again. We have a phenomenal package, and I know my son, John Jr., talked with a lot of folks who seem to have a little bit of an issue with what the high and the low close doji was. But I think for right now, if anyone is interested, we have an incredible offer for the high and low close doji scanners, which comes complete for with the Trade Nav product, and we include the Trading Secrets course, which is something we haven't really done before. So I'm going to go back and look for some questions. And with that said, if someone is interested, we have this available today. If you're interested, I've just posted where to find this. More importantly, I think the reason we wanted to offer the trading course with it was because people didn't understand how to utilize these setups and these signals.
Yeah, you know, Dad, I don't know if you hear me, though, but what I would like to do is, you know, can you mention, since you had Trade Navigator up with the doji scanner, if you can mention on the high close, low close, on the daily, weekly, how you can change it and specify where you want to actually run the scan. So, for example, you know, instead of running it on the S&P 500, let's say I want to look at the NASDAQ or you know, the Dow. Can you show that? I mean, that's kind of cool. I just noticed that you're looking at JP low close doji stocks. You need to raise it up a bit to JP high close doji stocks.
Just curious, I thought I wanted to see if anything generated a low close doji today. So I was cheating everyone and just trying to get my own analysis out of the way fast. But I figured, you know, maybe we got lucky and we could see something. So basically all you do is you come over here and you go JP high close doji, whatever sector that you want. So say you want high close doji stocks, and let's say I want to run it on Russell 2000 maybe. Nothing yet on low close dojis. But so, all right, we had 55 names that generated high close doji stocks, and I think that you now can kind of target the segment of stocks not only in a sector or an index, but now I could start to maybe dissect these and say, okay, what sectors are these? Like People's Bancorp, we know we got financials, et cetera, et cetera. So I think a lot of people aren't aware that the neat feature is I can actually pin, like a dartboard, I can pinpoint exactly what I'm looking for, what sector I want to focus in on. If I want to focus in on the Dow, just show me any Dow component stocks. So if I want to go right now, we have Procter & Gamble. So Procter & Gamble, unfortunately, probably for me, would not be a contender because of the seasonality. So what the key is not just to look for a buy signal for any old sector. The key is to scan for stocks in a specific segment. And that could be done easily, as Johnny was just describing, by coming down and clicking on the Trader's Toolbox.
The other thing I want to mention is that not only, obviously, we're showing you how to go ahead and do it on the screen, but what we've done is come out with a brief instructional video on how to set up your charts, how to even set up the seasonal graphs that you've seen in terms of the stocks. It's also explained in the tutorial there, as well as how to do everything you're seeing here in terms of how to use a high close, low close doji scan. That's all been done and will come with your purchase of the indicator package for the high close, low close doji. You get that instructional video. But again, Howard, unfortunately, what we've done, it's taken us quite a bit to release this scan. So currently, it's only available for Trade Navigator. We worked it out with them. If you're looking, this is the first time we've ever done it. We've actually included an instructional, one of our educational courses, the Secrets of Profitable Trading course. So normally that's $389. So the whole special right now is $389 for the scanner, including the course. Will be all included, and obviously I'll include the instructional video that came in as well. Now, in InvaderSim, it's $30 to run the end-of-day data. Obviously, the indicator is well worth to pay $30 in terms of the end-of-day data to process the scan. I will say we've worked it out with them that you do not have to purchase their gold package or their platinum package. So we're saving you anywhere between $800 to $2,500, I believe, is their platinum package. So there's a lot of value here, especially being that it's a one-time price for the scanner itself. In terms of the TOS subscribers, unfortunately, there's no ETA time. Again, it took us quite a bit to get this process for Trade Navigator, so there's nothing in the next coming up weeks for TOS at the present moment. Mark, the Doji scanner only works on Trade Navigator. There is no high close, low close Doji scanner for TradeStation or TOS. What you do see on TradeStation, TOS, and Trade Navigator are our proprietary indicators, the buy and sell, the filter pivot point, and the moving averages that we use as well. Now, those are available on all three platforms, as well as Ninja. Yeah, Zim, we really worked with them quite a bit to get this released. Yes, GG, it does. Again, for intraday end-of-day data. Intraday data, depending on what markets you want to look for, obviously the prices on that will vary.